Hello traders and welcome to another video review. Today is Monday, November 15th, 2023. We are going to start our review with the look at the Forex economic calendar at the beginning of the new trading week. So what do we have here? Well, some data from the US had been published overnight. Already at the 9 o'clock we got the German Buba Balz speech, then we have the ECB, the Guindos speech, and at the 11 o'clock AM we got the economic forecast from the Eurozone scheduled for release. OPEC monthly report is scheduled for release at 1 p.m. and then of course crude oil inventories as the main event of the day are scheduled for release at 4:30 together with the Cushing crude oil inventories. Bank of England MPC member Mann will give a speech 5 minutes past 5, and then there is a federal budget balance data scheduled for release at 8 o'clock. These data are from the US, of course. CFTC different speculative net positions are not particular interest of us here, but all of them are scheduled for at least 9:30. So crude oil inventories are the most important event of the day, but there's plenty from the US as well. So let's take a look at the euro dollar for sure, and then crude oil as well. Let's start with the euro dollar. 4-hour chart of the euro dollar is showing as the market coming back to the channel after a false breakout towards the level of 1.0756. Now we are hovering just below the 50 periods moving average, 1.0704, and below the intraday technical resistance located at 1.0726. So we are basically closed in between the old technical resistance levels, and the recent low located at 1.0657 will act as the technical support together with 1.0661 and 1.0668. In order to move lower, for example below 100 periods moving average on a 4-hour chart and below the short-term trend line support, we need to break below this trend line support, which is located right now roughly about 1.0635. Then if the market breaks to the second lower half of the channel, the next target would be located at 1.0523. As you can see, the market is coming off extremely overbought market conditions. We tested the level of 50 and then bounced, then tested again with a deeper movement towards the level of 44 points. Now we bounced and are hovering just around the level of 50. So neither bulls nor bears know what to do for now at the beginning of the Monday. Nevertheless, if we take a look here, we can see that since the beginning of the July, in the middle of the July 2023, the downtrend is the one that is mainly responsible for the for moving the market from 1.1270 towards 1.0450. Right, so this movement here looks like corrective. The channel is a corrective channel, slightly ascending corrective channel. So maybe the level of 1.0756 is the local high of the whole correction here, and any breakout lower might be the indication that the downtrend is trying to be resumed. Let's take a look at oil. So this is our crude oil chart. This is 4-hour chart of the crude oil, and we can clearly see that this 4-hour chart is definitely bearish. We recently hit the level of 74.95 with the new extremely overbought market conditions, and since then we bounced towards the 50 periods moving average roughly around 77.11, then moved down again, and then we have this movement up toward the first technical resistance located at 77.36, local high 77.71, and then reverse to the downside as we hit the neutral level on the RSI. Let me change this line to black so we now can see it a little bit more clearer. And as you can see, we've been testing this 50 points line on the RSI, and it's obvious that markets knows about it, and this market is now purely technical. So with that situation here, we can see that the bears are still in charge of this market, because every attempt of bouncing higher is being stopped at the level of 50 on the RSI, which corresponds to some level here on the chart, and then the market reverse. So what we should expect now is the breakout below 74.95 and the test of the level of 73.83. So the downtrend is intact on the crude oil, and new lows should be as expected, unless the level of 78.71 is violated. This might change the outlook to more bullish for sure. So that was the crude oil. Let's take a look at the US dollar to Japanese yen, because something nice happens here. As you can see, we've made another swing high. Another swing high was made at 151.87, and this swing high is of course made during the extremely overbought market conditions on the 4-hour chart. So this trend line still works as a charm and technical support for the bulls. We can see the previous swing high. Let me just reiterate this one. There you go. This is the previous swing high. We broke below the the supply zone, of course. Now this zone will be the demand zone back on again. So we will change our lines from red to green, and we can see that this kind of a market behavior, the V-shape, the movement to the upside toward new swing, then the reversed V-shape reversal lower, then bounce from the trend line, and then very strongly looking movement to the upside is perfect indication of a very uptrend forming on the US dollar to Japanese yen in the near term. And the strength of this uptrend, if we zoom out, we can see it clearly, is still very big. We should expect another swing high to be made soon, maybe even above 151. That's the first 52. That's the first target before any kind of a pullback. So for the intraday technical support, it's rather hard to mention something, but I guess that the level roughly around 151.07 might act as a technical support. Nevertheless, this market looks very strong. New highs are expected on the US dollar to the Japanese yen soon. And last but not least, let's take a look at some cryptocurrencies. We are going to take a look at the Bitcoin. What the Bitcoin is doing, as you can see, it's consolidating the recent gains above $37,000, roughly sitting at the upper channel line of this, this base channel from the lows at the 24th of October. Swing high and the local high is 38,000. Local low and technical support is 35,610. So there is a very wide spread here, but as you can see, the bearish divergence is now imminent. The market might be right now playing this bearish divergence by consolidating the gains, moving inside of the very tight range. So we should expect this market to go a little bit lower on the momentum as well. 55 points right now is perfectly good for this market to resolve this bearish divergence and accept the situation that the other swing high might happen soon above $38,000. Again, the next target is the round number of $40,000 for Bitcoin. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.